Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your 1 p.m. market update for Wednesday the 7th of September. You know, the song goes like this: what a difference a day makes. Gold sharply lower on heavy profit taking and liquidation. Equities sharply high as all the problems of the world are solved. The US dollar has a hiccup. Crude oil up on new demand. All this while the world waits for President Obama's speech tomorrow evening. Now let's go to the 6 major markets we track every day and see how we can create and maintain your wealth in 2011. So here we are at my homepage, Adam Hewison. We're going to go to our next market, which is going to be our portfolio manager, and I'm just going to get there right now. And here we are. We'll start with the S&P 500, which is up a bunch today. Up almost, in fact, we're up close to 2% in the S&P, over 2% right now. But there's a pattern developing here which I want to share with you, which I think is longer term negative. As we can see right now, we have our trade triangles are basically negative. Longer term monthly, which is our trend. Intermediate is mixed, which we talked about before. It's a mixed picture there. But this is the pattern I want to show you. So we're going to take our trend tool. You see when the little yellow box comes up here, it's live. So I want to draw just from the lows here up to here. You see how that just touches that level? 1, 2, 3. Very cool. And if we do something very similar on the top, we get the same effect. Now this pattern is basically a negative pattern in my mind, and I'll show you the reason why. And I'm going to put my telestrator on. I'll take this indicator off the screen right now, and I'll go to my telestrator, and here's what I'm looking at. Normally when you have a market that comes down like this, and I'll just draw the pattern for you, when it comes down like this, like okay, which you've seen right here, and then you have this sort of like move like this, which looks very, very positive, but in reality this is a what they call a flag formation. It's a continuation pattern normally, and what you're looking for is for this market to move out below this line right here. So when we see the market go below 11, looks like 1140 right here, then that's the time to either add to your short positions or certainly get out of any long positions that you may have. This market's still looking very, very negative. So this, as I said, this is a what they call a flag formation. So very simply, when the market has it, the opposite of course is when the market goes up like this, and we'll just draw it right here. It goes up like this, and you have this similar pattern. Looks like the markets may have topped out, and then you go up, you break out in the upside. It's a positive pattern. This is just the opposite now, because we've got the move down, a big large corrective phase right here, and I think this area here potentially, I don't know for sure, we may actually go a little higher, like we may have a few more days up like this, touch even the highs like this, hit the top of the Donchian trading channel, get overbought on the Williams percent R, and then I think we'll reverse back down and take out these lows. But we may not get there. We'll have to see how this works out. But generally speaking, I think this is a very negative pattern for the S&P 500. Let's clear the screen as we will do, and go to our next market. And we've got some very interesting markets today to share with you. And the next market we're going to be looking at is going to be the silver market. Now the silver market, you've got all of our indicators. All of our indicators are positive in terms of the monthly and the weekly, but the daily, short term, very short term, is still in a negative mode. We've had a big pullback from the 43 level. You can see we had several times we were up there, pushed it down, got almost to 40 and a half, somewhere like that, and in fact the low there was 40.41, and we sort of come back up almost $1 from those lows. Pretty impressive, the fact that it snapped back so quickly. Of course, it was under pressure because of what was going on in the other precious metal market, and that's gold, and that's the market we're going to look at next, because that has more interest for a lot of traders. The other thing I was going to mention about silver, silver has a type of Jekyll and Hyde personality. Sometimes it's considered an industrial metal, sometimes it's a precious metal. And depending how people are thinking of the metal at that point in time determines pretty much where it's going to head. So let's go to the next market, is the gold market. These are spot prices. These are live prices we're showing you right now. And as you can see, this is what let me put my telestrator on again. We've gone from basically being a plus 100 to plus 65, which is sort of like a trading range, but let me put my telestrator on because I want to share with you some things I'm seeing here. The one big thing, of course, has got to be the potential of a double top right here. Now, I'm not so sure it's a double top because it hasn't been confirmed yet. What would confirm it, in my mind, is if we take out this level right here. So right around the, I would say the 1750 level, if we go below that, close below that level, I think you'd probably say this is a top. Maybe this is the top for the Q3 top that we've been looking at for some time. But certainly this day here, which was yesterday, is a negative engulfing line, and closing lower, it would appear as though this market is going to close lower for the day, puts this as an intermediate top for sure. And I think we'll probably see more sort of two-way action. I would watch for the Williams percent R. Let me take everything off and scoot this market down to show you what we're looking at here. We're not in an oversold condition yet. We want to be somewhere like this, maybe even further if we can get it. The indicator, the MACD, just turned down, which is not a good sign, and also our daily has turned down too. So some negatives in this market right now, but it may just be a sideways market. But longer term, intermediate term, the trend is still positive, and we may see this market resurrect itself in the not too distant future. So let's stay tuned and keep alive with these broadcasts about what we're saying about gold. I think you'll find it very interesting and informative. You've got a lot of pluses still in this market, so don't give up yet. So let's go to our next market. Next market we're looking at is the crude oil. And the crude oil, as you can see, I'm just going to put this into a line chart because we can do it very easily with MarketClub. And you can see we are still a plus 70. However, the longer term monthly is negative. And if we scoot this down, let's just go a little further, we are still negative on the MACDs. However, it is beginning to, we are positive on the MACD rather, and we are now in an overbought condition. So here's the concern I have. One is we're pretty much at the top of the Donchian trading channel, but the market is still acting fairly well. Now, whether we see another push down remains to be seen. I think it's going to be reflective of the equity market. And if the equity market says it's going lower, then obviously crude oil will probably follow suit. But this is a key level to look at right here. If we see the market go below that level, I think we'll see some further downside action. Let me just put a trend line in here, which I think will be a very important one. So certainly the 84 level is a key level to watch here. Breaking that level would indicate another potential move down. This is going to be very, very interesting to watch. It's a very similar pattern to the S&P 500, and if that's the case, then this should be a continuation pattern to the downside. So let's see how that plays out. Let's go to our next market. Let me clear everything off the screen and go to our next market. And the next market we'll be looking at is going to be the US dollar index. Now, we talked about the index yesterday. We had a big move up. I'm going to take off the Donchian trading channels, which I can do very easily here. And I'm going to go on to the on-chart studies. You simply go click here, and then click here. We take that, and then we'll just click there, and we're back on the screen. I'm going to get a little more information. We've only got 3 months on the screen. Let's do a year to date. And you can see how this market, I'm going to draw a trend line on for you here. And just give me a second. We're going to look at, this is where we see this market. We've got this line of resistance right here, which is pretty much where we are. And I think that's going to be an important element to look at. So you've got support coming in right around here. We've mentioned this several times before. The 73.50 area is like a huge support for this market, every time it's gotten down there, it's bounced up. Last time we've gone from 73.50 up to 75.58, which is a huge move in terms of currencies. But we're still not clear of this picture. I think the resistance, which is right here, comes in at 76.10. If we see the dollar close over this level, I would say there's a very good chance we're going to see this market go much higher, even though it's hard to believe with what's going on. But it would certainly technically be feasible for this market to go back up to the 80 level, which takes us back to the beginning of 2011. So wouldn't be surprised to see that, but we've got to clear this and have a couple of closes over 76.10 to get this market's momentum swinging to the upside. So let me clear everything off the screen and go to our next market, and that's going to be the Reuters CRB Jeffries CRB Commodity Index. I always say CRB because that's how it's been forever. But this market again has had a nice recovery from the lows, and we're back up to, let's go back to a simple line chart, candlestick chart. Let's go to our on-chart studies, put downtrend channels. You can see we hit the top of the downtrend channel just recently, and we're sort of in a 55 mode, meaning the long term is down, intermediate is up, mixed picture, trading range. If you look at our indicator right here, the Williams percent R, it's back into an overbought condition, so potentially we could see this market have some downside effect. We would not be surprised to see it trade around the 325 area, 330 area from here, but we need a little more help. This market is it's turned up on the MACD, but certainly it's enough mixture here to warrant being very, very careful. Generally speaking, we believe it's going to go much higher because of inflation, and we are waiting for some signals, basically this monthly trade triangle to turn green. Once that turns green, I think you've got a great opportunity to make a lot of money on the upside, and I think you really want to play this market from that level when and if this market turns green. But we want to be patient, disciplined, and wait for the signal. Hey, this is Adam Houston. Thanks for taking the time to stop by and listen to us today, and I'm happy to share these markets with you. I think there's some great opportunities. Watch the S&P 500 on that formation. I told you the flag formation could be very, very interesting. Our trade triangles are negative on that, on the monthly, positive on the weekly, and that's causing the little trading range we're seeing right now. So until tomorrow, 1 o'clock, the same place, same time, I'll see you then. I'm Adam Houston for Market Club.